I take big risks, and I like to make money, and I like to spend it more.
Logan Paul just sold a Pokémon card for $16.5 million. He has $35 million in cash, no stocks, no bonds, no liquid investments. And even as a financial advisor, thinks he's insane. And here's the thing no one's commenting on. Is it actually smart, or is it costing him millions of dollars? My name is Luke Turner. I'm a certified financial planner that specifically helps high-growth entrepreneurs. And I've seen a thing or two when it comes to balance sheets for entrepreneurs. What I'm going to show you today are 3 things that I would be telling Logan Paul if I was his advisor. And chances are, if you own a business and are an entrepreneur, those same 3 things I'm going to share about Logan Paul apply to you too. Now, most people think $35 million sitting in the bank, I'm set for life. Well, here's the thing. $35 million sitting in cash is quietly costing millions and millions of dollars, nearly $100 million over the course of 20 years. And I'm going to show you the exact math. If you Google Logan Paul's net worth, it comes up to the tune of $150 million. Well, we inventoried everything that he talked about on the Iced Coffee Hour podcast. And I'm going to show you exactly what his net worth is and why it looks crazy on paper, but the structure actually makes a lot of sense. And lastly, why Logan Paul has made one of the smartest tax moves that anybody could make. But it's a decision that almost nobody should make. You heard that right. It's a decision that saves him millions of dollars every year in taxes. Just like when he sold that Pikachu Illustrator for $16.5 million. Those same tax strategies are ones that you could potentially be using too. So let's dive in.
Google estimates your net worth at $150 million. Is that accurate?
What I think is that you might have 80 to 90 million liquid.
My number's the same as Jack. I think about 80 to 90.
You're way off on the liquid. Guys, I spend money.
The house and the collectibles and...
Bro, I spend money.
But tax.
Logan Paul has $35 million sitting in cash. And most people watching that clip think that is absolutely crazy. Why would we have $35 million in cash? Now, I'm going to show you the opportunity cost, the amount of money that it's going to cost him over the next 20 years by having that money in cash. But at the end of this section, in just a few minutes, I'm going to show you exactly why it might make sense for him to have $35 million in cash. So what is Logan Paul doing right now? So we got $35 million in cash. And if you look up at this graphic, what you're seeing is a 4.5% growth rate. So if we look at interest rates today, 4.5% is a very reasonable growth rate we can expect. On that $35 million, we're expecting it to grow by roughly $1.6 million every single year. For the sake of this conversation, we're assuming that that money is going to stay in there and continue to grow and compound. So over the course of 20 years, it's going to grow from $35 million all the way up to $87 million. And you can see in 5 years, it's going to be at $43 million. 10 years, it's going to be at $54 million on down the line. Now, you might be looking at that and you're thinking, well, Luke, if he makes $87 million over the course of the next 20 years, he's definitely going to be set for life. Well, what if I told you that one decision was still costing him roughly $100 million? Now we know what's going to happen if we continue investing our $35 million in cash the way Logan Paul's investing it. But what if we took an alternative approach? What if we took that $35 million and we put it in a diversified portfolio? I know it's boring, 70% in stocks, 30% in bonds. No prime, no Pikachu cards. A diversified portfolio that's going to give us a consistent higher rate of return. Well, in this example, we're going to assume an 8% rate of return. Again, completely hypothetical. This is not investment advice. If you need investment advice, make sure you talk to a professional. What might seem like a small amount, right? 4.5% versus 8% from a rate of return perspective. Well, it's a huge dollar amount over the course of time. If we look at the numbers, our $35 million on a 5-year period is going to be $51 million. Over a 10-year period, $75 million. And then over a 20-year period, $163 million. So on the surface, our 3.5% rate of return difference doesn't seem like much. But we're talking about a $75 million difference. And you can see that the gap just continues to get wider the longer the time horizon is. And Logan's a young guy. So this gap could continue to grow upwards of $100 million from an opportunity cost perspective. As I mentioned at the beginning of this video, I work with entrepreneurs all the time. Entrepreneurs are known for having a higher amount of cash in their portfolio. And why is that? It's the same reason why Logan Paul probably has $35 million sitting in cash. Because his biggest opportunity is his brand. It's his ability to have deal flow come to him. It's his ability to invest in projects. And although it might seem crazy to have $35 million sitting in cash, it actually might make a lot of sense depending on the cash needs in the businesses that he currently owns and the potential deals that he could be investing in.
Would you sell Prime for $5 billion right now?
I don't know.
There comes a point in your life where you will not do something simply for the sake of more money.
Oh, I'm there. What am I going to do with this stock, bro?
Now that we understand why Logan Paul might have $35 million sitting in cash, let's look at his total net worth. If you Google Logan Paul's name, you're going to see his net worth upwards of $150 million. But is that really an accurate number? Well, there's no way to know for certain, but we've put together a ballpark based on the information that he shared in the Iced Coffee Hour. And again, this is going to be incomplete because there's certainly things that he has on the balance sheet that are not going to be mentioned today. As we look at it, we are estimating somewhere between $260 million and $310 million. The most valuable asset on the balance sheet, Prime, $200 million. His liquid cash, $35 million. His real estate, $25 million, which is 2 primary homes. Pokémon collection, $20 million. And then some few additional smaller items listed below. Now, when I look at this balance sheet, the one thing that sticks out like a sore thumb is what we call concentration risk. And almost every entrepreneur has it, where the large majority of their net worth is sitting in 1 or 2 individual positions that are privately held. In Logan Paul's case, this is prime equity. We're estimating it being roughly 65% of his net worth. If something catastrophic happens with Prime, it dramatically changes his life. Part of how he got here from a net worth standpoint is that he was concentrated. But what you need to understand is that there are times to take risks and there's times to take chips off the table. If I was sitting here talking to Logan Paul today, that would be the biggest thing that I would be thinking about is really, one, what are we trying to accomplish with the money? He even said in the interview that he loves spending money. Well, in order to spend money, you have to have liquid cash to spend. It doesn't do you any good to have $200 million in prime equity if you can't leverage it to spend it on things that you're going to enjoy in your life. So if you're an entrepreneur today, what should your takeaway be? Number one is that you should build your net worth and you should see what percentage you have tied up in privately held assets. If I had to guess, it's going to be over 50%. A lot of times when clients start working with us, it's 60, 70, 80, 90%. And then we start building out a plan to decide what percentage of our net worth do we want tied up in our privately held business and what percentage do we need to start pulling out of the business. Because concentration risk is certainly one of the biggest things that can blow up an entrepreneur's financial life.
You don't even pay very much in tax.
I spend money. I don't know what to say.
Do you have a financial advisor?
Yeah.
Oh.
He thinks I'm a lunatic.
Now that we've talked about Logan Paul's net worth, let's talk about the superpower that he has when it comes to taxes. He has put in place one of the most powerful tax moves anyone can make, and it required him to move all the way to Puerto Rico. But by doing this, he is saving himself millions of dollars in taxes every single year. Now, let's look at a real life example to explain how this works and how you could do it too. Although most people aren't going to move to Puerto Rico. Let's look at the Pikachu illustrator that he sold. For those that don't know, this is a Pokemon card that he sold for $16.5 million. And before you're going to tell me that it's crazy that he would spend millions of dollars on a Pokemon card, he made over $11 million when he sold this. But let's look at the taxes. Well, number one, we have to understand how do taxes work on collectibles, because this Pikachu card is a collectible. The way that they would normally work in the US is that you're going to take your cost basis, so what you paid for the card, and you are going to pay collectibles capital gains tax on anything above your cost basis. So in this situation, he bought the card for $5.3 million in 2022, and then he sold the card in 2026 for $16.5 million. The gain on that, roughly $11 million. Now, let's look at 3 examples here that I have pulled up. The first is if he stays in California. So if he stays in California, there's going to be some taxes that he's going to owe. He's going to pay a 28% tax on the gain. That's the collectibles capital gains tax rate. He's going to pay net investment income tax, which is an extra 3.8% on the gain. And then lastly, he's going to pay California state taxes, which you can see is 13.3%. So if he stays in California, he's going to pay roughly $5 million in taxes. And what he's going to keep is roughly $11 million. Let's assume scenario number 2. He bought the card in 2022 before he moved to Puerto Rico, and he now sold the card after he's moved to Puerto Rico. He's going to pay less in taxes, but not completely eliminate them. Same situation. Bought the card for $5.3 million, sold it for roughly $16.5 million. That's $11 million gain. He's still going to owe that 28% collectibles tax at roughly $2.8 million. He's also going to pay that net investment income tax at 3.8%. So in this situation, he's still going to save himself roughly $1 million in taxes, and he's going to pocket roughly $12.9 million. Here's where things get wild. If he bought this card after he had moved himself to Puerto Rico, he is not going to pay the 28% collectibles tax. He's not going to pay the net investment income tax. He's not going to pay California state taxes. So on that $16.5 million, he's going to pay almost no taxes. And he's going to keep $16.5 million. This entire time, we've been talking about the Pikachu Illustrator card. But where things get even crazier is the equity in the businesses that he owns. Because when he goes to sell these in the future, there's going to be an opportunity where he's potentially going to avoid all capital gains taxes, which could be tens of millions of dollars in taxes, all because of where he lives. Now, you might have watched this and you might be thinking, that tax strategy is really interesting, but Luke, I'm not going to move to Puerto Rico. What should I do? Well, two things you should do right now in this video. Number one is subscribe to this channel because I talk about taxes and entrepreneurship an awful lot. And number two is in the description below, I put together a tax guide that applies to every entrepreneur. If you're still watching this video, that means you probably enjoyed this breakdown we did on Logan Paul. And we're going to be doing more breakdowns on other entrepreneurs. If there's an entrepreneur that you want us to do a breakdown on, comment it below and we'll make a video about it. As we wrap up today, if you're an entrepreneur, I'll leave you with three things. Number one is make sure that you understand why you have the amount of cash that you have in the bank. Whether it's in the business or personally, idle cash could be costing you tens of thousands, if not millions of dollars, like it is for Logan Paul. Number two is make sure you understand your concentration risk. Concentration risk is when you're over allocated to private investments or privately held businesses. Understand why you're concentrated the way that you are on the balance sheet. And the last piece is make sure you understand your taxes. If you don't understand your taxes, you're probably leaving the IRS a tip. If you just heard those three items and you're thinking, I would really love for those to be done for me. Well, I got good news. That's exactly what my company, Mo1 Private Wealth, does for entrepreneurs just like you. Schedule a 15-minute call below. No pitch, just an honest conversation to see if you're a fit.